Everybody, morning. Once again, good morning, and welcome back to the show. Dun, 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 dun. Yeah, I thought about I don't know if some of you have told me I should do a theme song or something like that. Thought about it. Just I can't think of anything that really speaks to me. Dun, 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 dun. Anyway, welcome back to the show. And good morning, everybody. If you're new here, make sure you subscribe so you can chat with everybody on the live stream, including me. And I guess without further ado, let's jump into it, all right? Morning, you magnificent monsters of the markets. Grab your caffeine of choice. You know me, I've got this ultra blue this morning. Because, market just gave us a beautiful, beautiful hit of pure, uncut chaos. And when there's chaos, there's cash potentially to be made. So just when you thought things couldn't get any more stupid and ridiculous, the simulation that we call the economy decided to glitch out a little bit on Friday. The Supreme Court made a move that shocked absolutely no one and everyone who's been paying attention. Actually did its job, actually released a decision in 6-3 decision, struck down Trump's big, bold, beautiful Liberation Day tariffs. Welcome to the show. Chief Justice Roberts, joined by two justices, both Trump appointed himself, Goosh and Barrett, basically told the president, you can't just use a 1977 emergency powers law called the IEEPA to tax the entire planet into submission. Well, imagine that. The markets, of course, we had some wild rides. S&P, Dow, NASDAQ, we were jumping, we were dipping, we were popping. I mean, for a few glorious hours, it looked like sanity had returned to the markets, a brief, beautiful relief rally. Then Trump did what Trump does best, gets on social media and flipped the table over. And within a few hours, he was at the podium looking at the crowd like a Bond villain who just found a bigger laser. He announced, and I quote, "I have the right to do tariffs, and I've always had the right to do tariffs." Then he slapped a fresh 15% tariff globally on pretty much everybody out there, using a dusty, never-before-touched law from 1974 called the Trade Act. This is kind of funny when we leave all this junk on the books. I mean, we have the USC code, the U.S. code. My goodness, there's a lot of bullshit in there. We've got stuff from days gone past that some of it never been used before. And people are like, well, how do we know? I mean, we should just quit passing laws. We should shrink it down, make it like a one-pager. I mean, come on. Anyway, welcome, my friends, to the tariff whiplash, using things we've never used before. And today we're going to learn how to potentially profit from it. So what the beep just happened with the HE double hockey sticks? For years, we've been living in a world where trade policy is decided by a presidential tweet. The IEEPA law was the legal justification for a large chunk of these tariffs, the ones that hit everything from Chinese electronics, European cars. The Supreme Court just took a look at that sledgehammer, said, nope, we're going to take this and take it away from the president. They said the Constitution gives Congress the power to tax, not the guy in the Oval Office. Novel concept, I know, right? Well, that should have been the end of it. But our dear leader never wanted to be bothered by little things like, decisions of Supreme Courts, the law, the Constitution, the intentions of it all. Simply reached into his bag of tricks and pulled out a new one, Section 122 of the Trade Act of 1974. Boom. Shakalaka. Now, this is where things potentially get interesting. Section 122 is an antique, never used. It was designed for short-term currency emergencies, not for a one-man trade war against the rest of the world. It has two massive limitations. The tariffs can't be more than 15%, and they have an expiration date of 150 days unless Congress extends them. So Trump has started the 150-day clock, a ticking time bomb set to go off right around mid-July. And that, my friends, is the opportunity. This is what I'm calling the tariff arbitrage. See, this arbitrage is just a fancy word for exploiting a price difference. And right now, the market is pricing in a level of uncertainty, maybe a level of certainty that is actually quite delusional. This policy whiplash from tariffs on to tariffs off in the span of a few hours creates massive inefficiencies. And you know what? We can feast on those inefficiencies if we're doing the right thing, paying attention to the right stuff. So let's break down the players in this twisted game, shall we? First off, you have the whiplash losers. These are the big lumbering giants with global supply chains that are about to get sucker punched with a 15% tariff on pretty much everything out there. I mean, Caterpillar, they're already facing $2.6 billion of tariff headwinds this year, or they were. Every time new tariffs get announced, their CFO probably got to go check on him, right? I mean, having a heart attack, gotta get some sedation going on. Same goes for John Deere, DE, in agricultural and the big automakers like Ford, GM. They were already complaining that the tariffs are costing them almost $1 billion. And don't forget Boeing, which is basically a political hostage in any trade negotiation with China. These auto parts and plane parts, they're made globally, not here in the United States, at least not anymore. And these companies were obvious victims. They'll zig while the policy zags, and they're too big to move quickly. For the next 150 days, their stock's going to be a mess of volatility, likely. And you can trade that volatility, but it can be a dangerous game. How do you second guess it? Then you have the whiplash winners. See, these are the companies that are either insulated from chaos or positioned to use this chaos to their advantage. The most interesting name in this whole sector is actually Tesla. Yeah, I mean, they have a gigafactory in China, which makes them vulnerable, but they also have massive manufacturing here in the US, and some of the only cars that are pretty much completely made in the United States with United States parts. It's pretty wild. They also have manufacturing other places, though. So it does leave them slightly exposed. Compared to Ford or GM, who are deeply entrenched and entangled in complex global auto parts networks, Tesla has actually simplified their parts suppliers and their parts counts. They're more vertically integrated, and they know how to make parts here. The chaos in the global auto supply chain, it could be kind of crazy, but Tesla is kind of insulated. They can adjust pricing and production in ways that their legacy auto makers can only dream of. And finally, you have one of my favorite categories out there, the chaos hedges. And these are already popping. These are assets that don't just survive the storm, they feed on it. I'm talking about gold and silver, of course. I mean, look at what happened on Friday. The moment Trump announced new tariffs, gold blowing past 5,000 and silver popping up right alongside it. But they're not at all-time highs yet, so be careful. There's chaos here. Why? Well, because when investors have no idea what the rules are, they run to the old guard, the safe things with tangible value. I mean, You can hold gold, you can hold silver, but are they actual insurance against all this political incompetence? You know, tariffs actually destroyed domestic demand, not, I mean, they're a protectionist policy, but they have shown for hundreds of years, thousands of years, when you institute tariffs, they destroy domestic demand. They don't all of a sudden fix everything. It's just the reality is of what it is versus what all the economists say it is. It's kind of like two different things. And as long as this tariff whiplash keeps continuing, these metals, they're probably going to keep being interesting for a lot of traders. Could be your best friend, could be your worst nightmare, depending on which side you're on. So how do we play this tariff arbitrage? I mean, it's all about this 150-day clock at this point. But does he put like a pause on it for a day or a week and then throw it right back on as a whole new thing? I mean, it's an interesting idea. We all know that mid-July, Congress has to vote on whether to extend the tariffs, and that could be a massive binary market-moving event. The run-up to that vote, probably going to be a circus of lobbying, political posturing, market panic. I mean, they can't even get a budget passed, right? There's no way they're going to get this thing passed. The smart money will probably be playing volatility. Options on the whiplash loser stocks are probably going to get very, very interesting as we get closer to this deadline. And there's also wild cards here. Refunds. The Supreme Court ruling means that companies that paid billions into these now illegal IEEPA tariffs that are technically owed that money back. Trump says they're not getting the money back without a fight. But for a company with a huge import bill, billions of dollars, they probably got a pretty good legal team. And it's a potential multi-billion-dollar windfall just waiting to be unlocked and paid back. Keep an eye on companies that start making noise about tariff refunds. I mean, it's a hidden value that could be unlocked. And the market hasn't priced that in yet because, Trump says they're not getting it back. I mean, look, you magnificent monsters of capital, the world's a mess right now. The people in charge are, we're just making up the game as we go along. But it's not a reason to hide on your desk. It's a reason to get sharp on all of this stuff. This tariff arbitrage thing, perfect example of how to turn chaos into cold, hard potential opportunity. Understand the players, watch the clocks, hedge against crazy. That's probably the best decision. Now, if you excuse me, I'm going to get this thing going. Let's look at some charts, shall we? Look at some charts, see what we got cooking. Hey, good looking, what you got cooking? Let's see if we can find some opportunities. What do you say? I'm cold. I have to say, for any of you, I'm freaking cold this morning. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. Hopefully you're entertained. I'm just a guy on YouTube, just spouting some stuff off. I do make money in the markets. I make pretty significant money in the market. Why should you listen to me? Well, I mean, it's up to you. But if you trade, be careful, because trading stocks, options, bonds, forex, futures, cryptos, treasuries, you might lose money. And if you want somebody to tell you what buttons to push, you can go hire somebody for that. It's not me. I'm not trying to tell you what to trade. I'm not going to trade for you. So remember that. If anybody ever pretends to be me and offers to trade for you, it's not me. I'm not trading for you. So rock and roll, baby. Look at this. All time, 71,000. Past year, almost 72,000. I funded this account last year around tax day. It had been pretty much doing nothing for a long time. Didn't really, this was a Robinhood account that I linked up right here. I didn't really like Robinhood in the beginning. I tried to trade and I couldn't. The interface was just horrible for an active trader. Lost a few bucks, just kind of sat on that, not using the account. But then I decided to demonstrate a whole portfolio management and how to build an account out of, the dirt that can generate about $50,000 a month. Now, I'm at about $14,000 a month. I got a ways to go to $50,000 a month. And that's the whole point of the goal, is to show you how I'm building my account. Now, I've been posting it all public right here on KInfo since the beginning. What does it look like? I mean, where's the losses? They're in here. Go back to the year. I mean, I've taken a few. That was the biggest one. I tried something new and got punched in the face and decided I'm not doing that. But overall, that's how we're rocking and rolling here. Up about just around 72 grand. Not too shabby. How much did I start with? You know, back here on tax day, I started with about 75 grand in the accounts. I've added a little more. I've taken some out. I've paid bills. This is a taxable account that I have to use to live off of a little bit. So this guru thing I do doesn't always pay the bills. Funny enough. Everybody thinks it's all glory and champagne and roses. It is not. It's a very uneven, unsteady income stream. Booms and busts. Anyway, this I'm trying to build into reliable income. Why 50,000? Seemed like a good number. I mean, somewhere around 20K, things start being real smooth for me. So getting there. Getting there. Look at the markets. Dun, 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 dun. Let's check it out. Check it out now. Look at the ES. We opened up last night. Somewhere. There it is, right there. Opened up last night around 6 o'clock. A little bit of sell-off. Off this tariff chaos and maybe some Mexico drama. And, that move up, that retrace, it didn't go as deep as I thought it would. We actually just double bottomed here and took back off. Did make a higher high. Nice big fat retrace. So this is potential like a 1, 2, 1, 2. We could go higher from here. Let's check in. At the end of the show, if you didn't know this, if you usually cut out before the end, I go through SPY and QQQ and my expectations on the day. And why don't I do it like right now? Because at 9:35, I don't have enough data. And I use options gamma to kind of do this, to pick the range and then pick a level that I think we're going to hang out at most of the day, if not pin there for the end of the day. So that was my guess on Friday. And then that was pretty close. We ended up a little bit positive. And then QQQ, that was a bit closer right there. Pretty darn close. I was guessing we'd probably hang out at 607. Ended up we kind of closed the day at 608.80. That's pretty darn close. And right before the end of the day, we were down there at 607.44. So got that pretty darn close. There was the range. I expect us to stay in. Pretty much stayed in there. This is just all based on options positioning. Now, we had a big OPEX on Friday. So we've kind of cleared the board a little bit. But what's odd, there's not usually a bunch of option players for the end of the month. Not usually. That's just not typically the way these things go. But this month, we do have quite a bit. Trying to log into Bullflow. Apparently the tab crashed. There's the S&P. So hanging out right here. Look at this $800 million level right here. For this Friday, the end of the month, basically, the last trading day of the month. This doesn't usually show up like this unless we're at the end of a quarter, which would be over here, March 31st. It's kind of interesting. We've got a pretty clear bubble forming. We'll check back on this, after about 10 o'clock. This doesn't firm up in a reliable way till after 10, closer to 10:30. So usually I come back and look at this last thing before I wrap up the show. And if you've never seen that before, that's bullflow.io. It's a gamma chart heat map. I use it to kind of predict out where I think we'll end up for the day. So stick around to the end. If you can't stick around to the end, you can always check back in later on. So NASDAQ, same sort of chaos chopping around here. We did make a lower low here, though. This is a different pattern. So ES kind of double bottomed out here. NASDAQ made a significant lower low. We didn't quite go as far as I thought we might. Reversed up, made a little bit higher. Now, there is one alternative here. That could be a leading diagonal A. That could be, or W. That could be a X. And we could be starting on a Y, but the proportion here doesn't look like that. It looks like this is first move up, retrace, 1, 2, 3, and we're starting positive. And that's the way it kind of looks like on ES too. Like this looks like a move up off the low, a retrace, and trying to go higher. So I would think the operative is going higher, not lower right at the moment. 1, 2, 3. So where might 3 end up? Probably somewhere up here in the 70,050 area. If we're going to do it, if we can get back above these highs, we'll probably end up somewhere up in here. Then we'll probably get, depending on if this is sloppy or clean, we could retrace all the way back down in this vicinity, try to stay above that, and then go for another push higher. It could, the pullback could be shallow, it could be deep. We want to stay above this level. Otherwise, that's an indication we're going down. Now, if we reject, there's another fine point here. If we reject this level and start breaking down below this stuff, probably going down in a bigger way. Not that clear on NASDAQ. So I'm going through S&P because S&P and NASDAQ are two different critters right now. See, we've had higher highs, the highest highs on S&P. And we've kind of been banging at it, finding a significant resistance up here. Now, NASDAQ's not the same way. NASDAQ made the high back here. This was a lower high right here in February. Even though we got up close, it was a lower high. And this is looking kind of bearish and continuation lower. Even though we may have a short-term up, this may still make another lower high over here and still push us down here. So these are kind of at odds with each other. Oh, got an alert on Adobe. Hitting the targets. Hitting the top of the target. Look at that. Stuff in rocket science. Just price action. Seems like I get lucky a lot on these. Had this target on Adobe for a while. Yeah, probably since somewhere early 24. Had this target sitting down here. Beautiful. We may push just a little bit lower. Could come down to 200 on Adobe. I don't really expect it to come all the way down to 140. It could. That's entirely possible. Proportions here. This was an absolutely beautiful ABC correction. We're hitting the top of the ideal spot. This would be the bottom of the ideal spot. And then this would be a little bit overzealous on this correction if we got down to 140. So is it a buying opportunity now? I don't know. If you bought now, are you willing to sit through a 100-point pullback down to 140? I'm not. So I'm going to wait for a reversal to show up where we move up, we retrace, maybe make a higher high, not a lower high, before I get involved in Adobe. And it could be from down here, down here to 140. So just be careful on that one. Sometimes I get lucky on those. Russell, a little different critter. A lot of different critter compared to the other indexes. This is small caps. Like 85% of the company works, or 85% of the country works in small cap companies. So where a lot of the population works, even though these are not giant companies. We have a series of lower highs. We have this series of higher lows that we broke below, came back tested, and now we're sitting down in here. So this is a little bit of a coin flip. If we start breaking higher, making higher highs, we're probably going on up here, like 3,100. If we break below this low and then this low, probably coming here initially. That's about 2,400. And then we'll see if that can hold if we go down. So bigger upside potential right now than downside potential. That's like 250 points risk on the downside versus 350 points on the upside. Maybe 450. I guess 450 on the upside to 3,100. So risk reward is pretty good. But if we dip down here and we can hold it in reverse, well, your upside much bigger than what it is right now. So keep an eye on that one, on Russell. Nothing's really changed. There's no clarity yet. Still looking at lower highs, higher lows. It's interesting to me that we've set up another set of higher lows on top of this set of lower highs over here. Technical analysis, the weakest form of, trend lines are the weakest form of technical analysis here. So be careful. This head and shoulders did play out perfectly, right to the, almost to the tick right there. So that could be the bottom, and we could go shooting off. You can set an alert on these two trend lines. And now the cautious thing, because of the watermelon seed squeeze nature of lower highs and higher lows, whichever way we break could be a fake. It could break down and then pop, could break higher and then drop. So it's an unreliable pattern. I'm going to wait for confirmation, probably breaking above the extremes here before I go chasing anything. Now, if we do drop down here, that would be an opportunity to add longs. And you probably want to do that out maybe to July, toward the end of the tariffs. Oil popping up, trying to get through this resistance. With all the Mexico drama, I'm not sure I saw much on anything that happened on Iran. So maybe it's all misdirection. I don't know. So if this goes popping off, it's going to cause inflation to rip. Inflation ripping puts up pressure on rates. Up pressure on rates. Who knows what happens? Who knows exactly what happens? But I did guess a couple years ago, back here in 22, that we would go through a sideways period, and then we'd have to raise rates some more, and then we'd actually start the economic crisis. So what's interesting is we went a little higher than I thought we should, and then we're kind of bleeding that back off. But what if we got to pop rates again? They come on up here. Things are going to get pretty ugly if we do that. So the blue, DGS2, Delta Golf CR2, that's the actual treasury rate. It's the market rate. The orange is the Fed funds rate. FUNDS. How do you create this? Just go on to TradingView, type Delta Golf CR2, DGS2, and DGS and the number 2. Pull that up. Then click this compare button right up here. Add FUNDS to the chart. Puts the other line on there. That's the, FOMC rate. Everybody thinks the FOMC rate's set by the Fed, but really, the 2-year constant maturity rate is the rate, the free market rate. That's the rate that matters. If this thing starts ripping, they're going to have to chase it higher. And my prophecy I outlined a couple years ago could come true. The prophecy. It'd be interesting to see if that comes true or not. It's been out there for a couple years. I've left it on the chart just to see. Looks like gold popping up, coming up near the C targets. And watch out for first drop, A, B, C, and then next drop should be A, B, C on a grander scale here. Target would be down here around, 4,000 to 4,300. Be careful. Okay, if you're chasing gold, silver's kind of on the same similar sort of path. We're popping up. We've got this low here. We've got to move up, a retrace, and a potential move up. This would be the, let's move this over. I could put bigger downside on silver here. So silver looking for it to pop up in this area. ABC style. And if you come back up into the 100 area pretty easily. And then roll over down here back to the 50 area. That'd be a pretty wild ride on silver. And then come ripping back higher. I don't think the chaos in silver's done. Be careful out there. It's just classic corrective price action. So Bitcoin trying to do very common when we get done with one of these squeeze things, we might fake out like I was talking about on Russell. Because this is probably a fake out, and then we go popping up here. But then that's probably completing the A wave. Then we do a 3-wave retrace back down for a B wave, and then we climb back up for a C wave somewhere out in May to June. Somewhere in that time frame. And then we go cruising down again. So Bitcoin's probably going to be choppy for most of this year. Kind of outlined A, B, C. And this looks like, so far, this was a little baby A, baby B. This would be the baby C in that A wave there. And then we'll probably do this correction down to this B wave. And then we'll probably pop up in here for a C wave out in May, June. That's kind of what I have outlined for Bitcoin. Ethereum, same similar situation. We may see a pop up into this 23 to 2,500 area. And then a retrace, and then a climb into May, June. DAXY. Interesting. This has been pretty correlated with gold and silver. When dollar is dropping, we're seeing gold and silver popping. But this move right here, it did have a 3-wave structure. We've got to watch this retrace. If we hold the 618, come back up through, gold and silver are going to be putting dollar climbing, which is, this is the dollar index, dollar climbing puts down pressure on gold and silver. So gold up here, down pressure if dollar is going higher. And when dollar is pulling back, it puts up pressure on gold and silver. Now they're not proportionally equal. It's just what you see when we're getting red days on dollar, we're getting up days on gold. When we see green days on dollar, we're seeing red days on gold. But they're not proportionally linked, really. So we've got resistance coming up here at the 98.60, 98.70 area on the dollar. Those look kind of corrective at this point. We may see a lower low before we're completely done on the downside here. Now this could pop on up in here. create some downside on gold and silver. And then we can flush it down here. We get some sort of epic rally in gold and silver. And then we set the bottom and rally off of that. The short dollar trade is nearing the end. It's been rocking and rolling since September 22. And really kicked in high gear last year, into this year. But it's probably coming to an end. And then we're going to reverse it. And we're probably going to go cruising up here to 130, 140 on the dollar index. Change the whole narrative on weak dollar. Global liquidity. I use the Japanese stock market as a global liquidity indicator. When things are flying high, we're seeing this thing climb higher. We're just consolidating here, which is a warning sign that we may get a bigger pullback. It can consolidate for a long time, but we see these big consolidations, we usually get sharp pullbacks. Not all the time. Sometimes we pop out of it, but if the consolidation goes on for a little while, we could see a bigger pullback. Back to the roadmap line would be expected. We haven't been there since back around Liberation Day, so be careful. Apple, like we talked about, tariffs on again, off again. If Apple can get their billions of dollars of tariffs back, could be good for their bottom line and pop up into the target area, 295. Amazon. For a lot of stuff, I don't think Amazon directly pays tariffs, but all their sellers do. And they use a lot of third-party sellers. So it's going to be an interesting one to see how it plays out. Potential the bottom is in place here. Looking for this to get back up to and through the roadmap line. Test it from the top, hold it, support, and keep going. Break back above the highs, keep going higher, and big upside targets. Like initially, I'm just looking for a return to the highs, but if this thing can get going, we could see this up at 400 or even higher. Some resistance around 400 and then 700 above that. Really get going. So, see what can manifest out of here. Google. So this looks like an A wave down, working on a B wave retrace. Got the high, got the low, watch for resistance. Right in this zone. And then first move down, second move down puts us down to the roadmap line. Right down there. So watch out for that to turn down off of there and take another spill. Meta. Look for this to pop on out of here. Initial just a return to the high, but long term 1100 to 1300 would be the target. Could take a couple years to get there. Microsoft still being soft, not showing any signs of a bottom in place. Coming on down to test the 380. If we get below about 370, we're probably going on down. Maybe make some lower lows here. Want to keep an eye on. No sign of a bottom yet in Microsoft. Nvidia still stuck between the 195 resistance and the 175 support, although this did a roadmap bounce right here. So this was on the list this week. Here's the high, here's the low. Kicked off an entry, and 197 to 200 will be the target right up in here. So it could poke up through. Pop right up in here, and then watch out below. That'd be also like a fake breakout situation. Like we've been banging on this resistance zone. We pop up through, fake everybody out, and then rip everybody. So classic price action there. Tesla Salah. This may need a trip down to this 380. Watch out right here. We started pushing back below 400, 397. I'll say 397. Start pushing back below 397. Probably going to push on down here, 380, maybe even 375. Still long-term bullish, but we gotta get through whatever we're doing right here. Doesn't seem that we, seems like we're gonna reset this. Maybe make a lower, maybe make a lower low than that low back there. Maybe this was complete, and we actually need to make a. Maybe this was the 1, 2, 3, 4, 5, and we're working on the wave 2, and we need to make a bottom somewhere down in here so we can go higher. Netflix broke down below the supports and set up the 60 to 70 targets. Gotta wait on that. I'm not trading for it, but that's what we got cooking. Now, I go pull gainers, things moving $2 or more up in the pre-market, put them on the gainers list. Things moving down $2 or more, put them on the decliners list. Hunt for some opportunities. And then we go look at some setups, and then I give you kind of the gamma expectations. So that thing popping right there, big jump. It's biotech. I just don't trade biotech for the most part. Eli Lilly has the potential to come on up here to 1279. We may be sitting around, waiting around for the test of the roadmap line and the breakouts. Might be waiting for that before we can pop up here. DPZ. So I'll be very careful here. Came up shy of that target, and then it also has an even bigger target cooking down here. This thing is in a corrective move. A, B, probably 1, 2. This could be a 3, 4, 5. 250 area is kind of what I've been expecting down here for a number of years. Short term's got a little pop, but longer term. GDXU, be careful. Gold miners 3x leverage. If gold takes that second pullback, it's going to rip everybody. SanDisk keeps grinding higher. Next upside resistance, 876. ESLT. Yeah, be careful. JNUG. Lots of gold stuff, some crypto stuff. TDW. Tidewater. Here's a high. Here's the low. Set for 134. It's probably a weekly chart thing because of how long this took to do it. Maybe even a monthly chart thing. Oh, it's a weekly chart thing. Yeah, so that was a weekly chart bounce. It's a classic market roadmap pattern there. Reversal off the bottom, retrace, hold support, break back up through the 618, continuation, maybe bigger continuation. We have the bigger 618 up here and bigger potential continuation. But then we have that, also have that monthly resistance up there. Monthly chart resistance. Coming up here at 300. So we could see this pop on up, retrace, and then pop on up through if we're going higher. LEGN. Nice little pop. That there's no confirmation the bottom's in. That can keep going down. Dick's Sporting Goods still has a 3-wave correction potential for moving on down here around 140. PDD. Timu. Has this long-term 180 upside, but how long is it going to take to get there? Who knows? Gold. Fortune Brands looks pretty nasty. Almost touched the target there. Did get a lower low. That could be complete. So if this is one you want to watch, getting back up through the 72, 73 area could kick off the 108 here on Fortune Brands. Corning, as I talked about a while there, this was a sleeper for data center stuff. Not so secret anymore. Here it goes ripping on 150, 190. SSTK, Shutterstock. That just seems like it's getting beat down. I mean, why buy digital images when AI can just make it for you and you don't got to pay? SBIT, short Bitcoin. That pattern looks played out and looks like we're going to come back to the roadmap line. So that would be a pop on Bitcoin. Be careful. EHAB, retrace to the roadmap line. Wheat and precious metals. Be careful. We're due for retrace. VNDA. Here's the high. Here's the low. Entry, $10. Low price stuff. Be careful. VRE. And I wouldn't touch that chart. Sideways choppy price action. GPCR. Probably come back to the roadmap line. Stuff up was dropping. App loving. Still hunting the bottom. Get back up through 559. We can go higher again. Korea. Taking a little step back, but probably going to keep rocking because of Samsung and Hynix. John Deere, a little bit of chop in here on the Tariff Chaos. NVO. Ooh. Broke the head and shoulders pattern. Didn't get the bounce. So, lower low. How low can she go? Roadmap line bounce. Oh, that's lower right there. So, 38, possibly 33 on the downside for NVO. DoorDash, ideal down at 140. Race 300. Been watching all these for a while. MU needs a revisit of the roadmap line. I don't know that it's going to do it. It may just consolidate here and go ripping on up to like 893. HubSpot, no sign of the bottom. AVAV, looking for this to be done down here around 180 to 220. CrowdStrike keeps pushing lower. We saw open, let's see who was it? Anthropic announcing they figured out how to do security auditing with their AIs. So seeing more software carnage. Maze was a dropper, now it's turned into a popper. CLS, watch for the roadmap hit. VRT probably needs to come back to the roadmap line. We hit some targets. LEU needs to extend right down in here. I'd be interested in trying to pick up some exposure to that if we get down in that area. Adobe, like we already talked about, hitting the targets, but it can come on down to 200 more ideally. Coinbase probably has some downside to go, back down around 80 to 90. Reddit has some downside to go, probably down here around 80 to 90. International Paper. So we're cooking on a downtrend of highs here. If we can break through, upside, SW. It's just choppy sideways. I wouldn't touch that. MSTR. Trying to prove that this is the bottom. Resistance up here around 220. It's $100 higher, which is a pretty substantial retrace. So watch for Bitcoin. If Bitcoin starts breaking higher, this will probably push on up. We had the potential to come on down here, though, to 67, 68, 69. Workday. Man. I had this target out here years ago. Looks like we're going to come visit it down here around 115. Core weave. Look for this to break up through this downtrend highs. If we can do that, we can see some big upside going on core weave. Circle. With the stablecoin question mark out there, you know, banks trying to get Congress to say that they can't pay interest. Creates a question mark. If we can get that to pop on up. Break through, retest. Large upside potential on the circle. APLX, just choppy sideways. Monday. Oh, lower low. Let's see how low could she go. $34. Looking for something down in there. Salesforce. Ooh. That might push on down. 162 area. Looking for this to be the bottom, but it doesn't look like we're there yet. ANET, if we get the continuation here, be down in this zone. Pull this. Come on. Pull this gap here. So if we break down below that low around 120, probably coming on down to 100. Lower than that, 115 right there. Palantir, at a support zone. Hood. I mean, Palantir is AI, so, I mean, it's kind of ridiculous. It gets beat up. Hood. This is potentially working on the bottom here. It could dip to 67. I'm expecting this to hold, this area to hold, though, right here. AMD, we're probably going to need one more lower low down around 180. The way this 1, 2, 3, 4 probably needs one more push right in here, and then opportunity on the upside. FAS still working on a pullback here. Could pull back to this 120 and then set up the bigger climb. ALB, hunt for bottom. ITRI, hunt for bottom. ARM. Resistance at the roadmap line, turning down. And it came up shy of the ideal downside target on that head and shoulders. That shoulder kind of weak. You know, usually the shoulders are kind of similar in size. That one's kind of weak, but it's more like head, shoulder. I could definitely push this down there around 90. Bloom Energy. Watch out for a retrace, but this can pop on up. We basically tagged that upside. Came back, retested the breakout. That sets us up for climbing up to 225 area. Next upside target. But if we break down below these lows here, looking for support in this area right here. If we get below that, we could come down here. That looks like complete and moving higher at this point. NOW, 87 on the downside. So stuff set up for a potential entry today. Oops, that was not what I wanted to do. Not great statistics. It does have a statistically significant history. 31 trades. Potential entry right here. 64% of the time it goes on to hit the targets. Target would be 266.90. Profit factor is less than 1, which means it's negative. Means it's a net loser. So I probably wouldn't take that trade. But that's the, that's the entry today. Target 266.90 and stop is dollar below the low, down around 210. EXPD. Here is the high, here's the low. There is the move up. This is an uptrend, pullback, potential continuation, 173. Now the numbers here are a lot better. 49, statistically significant. 75.5, that's about average, and 1.15, that's about average. So this is just an average trade right here. The target right up here, average trades last 45 candles. But if you don't want to run out of time or whatever, you need to count on 150 candles, or about 7 months for the 99th percentile of trades. That does leave 1%, could still last longer. 45 trading days, which is about 3 months, 2 months, 2.5 months. It's 45 candles, not 45 calendar days. 150 trading days, not calendar days, which is about 7 months. Is how long this could last, and it could last like 2 days. It could be up there tomorrow, so be careful on that one. As always, pretty good though. RYI. This one only has 10 trades in the history, so no statistical significance to the statistics down here. It is an uptrend, a pullback, potential continuation, 32. Stop is always dollar below the low, down around 21.90. SAMG. Here's the high, here's the low. Potential entry there, 1641 target, and stop is down here around 14. As the low, minus $1, 13.25. And 14 trades in the history, so these statistics don't matter, but that profit factor is negative, so be careful. Circling back around, looking at the SPY and QQQ, kind of give my expectation, and make sure if anything's helpful, beneficial, you phone a friend, share it with a friend. Let me know if you find benefit in anything I'm doing today. Grab that, pull it over, and let's actually pop up some gamma charts. Check out what we got. Ooh. See, this is why you wait. This is why I wait and make my decision later. Now, the bright red, we had a big green bubble in here. It looked like we're going to be green and hang out near this 800 million level. But now we have turned this somewhat more sour grapes. And we've got big levels all the way down to 675. Biggest level down here. Below us, looks like we're down to 680 with 300 million gamma exposure. So there's a big bubble. Even though the colors maybe, you can kind of see the bright red right in here compared to the darker red. I'm not a fan of the red in the red, but the bright red is the bubble at this point. So we have and then the green is also part of the bubble, the bright green. The darker green, not. So we have kind of the bubble going up to 691 and all the way down here to right now, roughly 675-ish. Well, it keeps changing. So 679, I guess. 679 up to 691. Golly, touchy today. 691, pull this down a little bit. So that's the range kind of expecting us to hang out in today. As far as how do we get the level I expect to, be the most important. Well, on this bullflow.io, you click the levels, and we were on the heat map. And to me, this is the most clear way to look at gamma exposure, this heat map, because it shows you by day, by expiration. Usually a gamma chart shows you levels like this and it just kind of sums up everything. I don't think this is as helpful. Like these levels don't speak to me as much. And looking out here, you know, the 23rd is today. Out there, the 27th is kind of the big expiration with puts. Do have more, we're heavier on puts than we are on calls. We got a little bit of put skew, what we would call that. I've been trying to trade gamma stuff for years. I wouldn't say I'm an expert at it by any means. It's a lot like tea leaves. I think it provides some pressure in the market, but I don't think it's necessarily the most reliable. And so I come in here and try to figure out where. Now, common thought is max pain is where you've got the biggest levels of options that would go to zero. Now, I look at it a little bit different and look at you look at the yellow kind of as a sum, and you kind of have to average, like where is the middle of that? Right in here. And then you look at the purple, you kind of average, like where is the middle of it? Right in here. And then you have to take those two averages and then find a kind of a middle ground point between them. And somewhere around the 688 area. I feel like it kind of balances the big purple with the big yellow. And that's how I kind of pick out the area where I think we'll hang out for the day. That happens to be a little bit above where we are today. So that means gamma may put up pressure in the market from where we are currently to balance these calls and puts out. I don't have any tool that sits there and calculates and figures out the balance point. I mean, maybe it'd be cool to do, but I don't have that thing. I don't have anything like that set up yet. So it'd be nice to be able to do it just for one day, though, because I don't think these other expirations have as much influence as the current expiration, especially with the popularity of 0-day options. And you can see this thing's live changing right in front of our eyes. And that's why usually I can't do this at 9:30, can't do it at 9:45. Usually the closer to 10:30 I can do it, the better the numbers are. And it keeps evolving all day, though. So this can keep changing around. And this level out here for Fridays keeps flowing around. You can see there's not really a big bubble for Friday right now. We just got a bunch of levels, and they're stacked all the way down in here on Friday. I keep looking over because the coloration is a little better on my live feed than it is on the monitor I'm looking at straight on. Now, QQQ. Let's save this so we don't lose it. Check out QQQ. Pull this over. I actually play the Qs. Well, I played NASDAQ for my beer money trade. I've actually started playing SPX too under Greenlight Income Alerts. If you're interested in that, you've got quite a few wins in a row already. I post the beer money trades on X. Now, interesting here, we have this big level sitting at 600 for today. But there's no real bubble formed at all. A few big levels, but nothing concrete. No bright green bubble zone. NASDAQ's just been less favored lately. So this big 600 level is kind of like a moth to the flame situation. I'm gonna, let's see. It's down to 595, which is basically where we are. And the top, I'm going to put at 607. So we got some down pressure on the Qs. Pop back over to levels. If you want bullflow.io, links in the description. I get a little cheese off of it if you use my link. You don't have to use my link. You can just go there and get it if you want to. They don't pay much cheese. But I do appreciate it if you use my link. If if you find this beneficial. So jumping in here, I'm going to go with somewhere around 602, even though the big level here is, yeah, there's just not many players on Qs until the main quarterly OPEX. This week, today's expiration and Friday's expiration just kind of dwarfed by this monthly expiration next month, which is 4 weeks out. We got the rest of this week, and then we got 1, 2, 3 in March. So that's 4 weeks out. That's kind of the big influence there. Interesting. At this point, I think we go with 603. Could be a little higher. Could be 605. Because this level's way up here, and this level's down here. Kind of balance between them. Let's go with 605. Like I said, it's kind of an art, more art than science on that. Because I don't have any tool that actually sums it all up. Plus, I'm also trying to guess. Yeah, that's right up where we are, too. 605. Plus, I'm trying to guess like how much of it is today versus these other expirations out here. Usually, the big level is not a month out. Usually, it's in the next few days to. So, Qs have fallen out of favor to be played a little bit. We're seeing just a lot of players in SPY right now. And SPY can put the down pressure on the market, so. Guess we'll see what happens. It is interesting, though. We've got the big level on SPY above us and out to Friday. We had the big level on Qs below us and today. So we may see this may take a trip down to 600 and then come back up in here for the end of the day. It's kind of what I expect at this point. So if that was helpful, beneficial, let me know. Let me know in the chat. Let me know in the comments. Let me know in Discord. And thanks for coming, everybody. We'll see you again tomorrow. I'll be on Market Masters 11:30. And then I'll be back here tomorrow morning, same bat time, same bat channel, doing this all over again.